Hello girls, we'll see the next illustration number 22. Okay, so this is a problem on utilization of ITC when intrastate purchases by interstate supply. Okay, so I've already done one problem for you with utilization of ITC when intrastate supply of goods and services, isn't it? So we will see this next problem. Okay, so there is not much of differences in the formatting of the problem as it's always the calculation of transaction value and then the calculation of output tax liability, and from that you reduce your input tax liability, you arrive at whatever is the net GST that is payable. So it's the same even in this problem. So let's see this particular problem. Let me read the details of the problem. It's there in page number 173 in your textbook, illustration number 22. Messrs. Pandey Limited of Mumbai, having registered business premises, makes the supply of goods worth rupees 7 lakh to Messrs. Jain Limited, which was also a registered business in Mumbai. Further, Messrs. Jain Limited sells the goods to its customers in Bengaluru for rupees 9 lakh. Compute the tax implication under GST if GST rate is 18%. Okay, so you can see that there is also IGST involvement here, where it is also crossed the boundaries of the state and they have made the sales. So again, it is for two different companies which are involved here. So you have the particulars column and then you have the two companies column. One is Messrs. Pandey Limited, another one is Messrs. Jain Limited. Okay, so firstly let us arrive at the transaction value of both these companies. So the transaction value is 7 lakh and 9 lakh. Okay, it's made a mention in the problem. Messrs. Pandey Limited of Mumbai as supplied the goods worth rupees 7 lakh to Messrs. Jain Limited. Okay, so it is 7 lakh here for by Messrs. Pandey, and again you can see here Jain Limited also has sold goods worth rupees 9 lakh, so which we have taken in this particular column of Messrs. Jain Limited. Okay, so now let us arrive at or calculate the total tax liability. That's nothing but your output tax liability. So as it is, in order to calculate your output tax liability, you need whatever is the sale amount, and on that you need to be knowing whatever is the GST percentage. So the GST percentage given here is 18%. So obviously for CGST and SGST it will be equally divided. So calculating the total tax liability, that is the output tax, it will be 7 lakhs into 9%. So 7 lakhs into 9 divided 100 is the same 7 lakhs into 9 divided 100. Okay, for IGST calculation it will be the total percentage, isn't it? So first let me calculate this for you. So 7 lakh into 9 divided by 100 will be 63,000. Again 7 lakh into 9 divided by 100 will be 63,000. This is the output tax liability of Messrs. Pandey Limited. Okay, now calculating the output tax liability of Messrs. Jain Limited. Now actually if you see, Messrs. Jain Limited has sold the goods to a customer in Bengaluru. So he's in Mumbai, isn't it? So from Mumbai he has sold it to Bengaluru. So it is an interstate transaction. So you have to calculate IGST. So for calculating IGST, it will be the total 18%. So the sale value is 9 lakh. So it is 9 lakh into 18 divided by 100. So that you will arrive at 1,62,000. So this is your output tax liability for Pandey Limited and Jain Limited. So now we have to arrive at input tax credit, which you have to reduce from your output tax liability. So in order to calculate your input tax credit, now you have to take into consideration the purchases. As it is here in the problem, like the previous problem, only the purchases of Messrs. Jain Limited is made a mention, because Messrs. Pandey Limited has sold the goods to Messrs. Jain Limited. So obviously Jain Limited is purchasing the goods worth rupees 7 lakh, isn't it? So we are going to calculate the ITC for Jain Limited, since the purchases of Pandey Limited is not made a mention anywhere in the problem. Okay, so therefore CGST and SGST for Jane Limited. So 7 lakhs of purchases by Jane Limited. 7 lakh into 9 divided by 100 will be 63,000. Again 7 lakh into 9 divided by 100 will be 63,000. Okay, so we have arrived with the ITC of Jane Limited. So now we have to reduce the ITC from the output tax liability. So 1,62,000 minus 63,000 and minus another 63,000, you arrive at 36,000. So this is the net tax payable by Jane Limited. But since we don't have any ITC for Pandey Limited, this 63,000 and 63,000 will be retained, and it will be as it is, where all this amount is pending to be paid as a tax by Pandey Limited. So this is about illustration 22. If you have any doubts, you can clarify. Thank you.